All right, thank you everyone for being here this morning. Nothing like talking financial management at 8:30 in the morning on a Friday. This is Financial Management for Projects Part 2. It is part of the Southern Vermont Economy Project Development Series. I'm going for a record of how many times I can use the word project. Southern Vermont Economy Project is a program at the Brattleboro Development Credit Corporation, and it provides webinars, small conferences, trainings, technical assistance to help advance local economic and community development projects in Southern Vermont. More information on the project and upcoming trainings is at this website here. And this is just a snapshot of that project development series. So right now we're on the second part of financial management, which is the second in a four-part series. We had project stewardship earlier in June. In September, we will be hosting UNH Extension, which will be doing a 2-day project management training, which comes with a certification. And then a grant writing workshop, excuse me, sometime this winter. So here's the agenda for this morning. First, we're going to have Bobby Kilburn. She's our Director of Finance and Grant Management at the Brattleboro Development Credit Corporation, and our resident expert on budgeting. And she's going to touch on business budgeting, capital budgeting, program budgeting, and project budgeting. And she'll explain a little bit why she kind of pulled program and project out separately. And so it'll be a little bit of a recap of what Gary went over yesterday. But then she's going to dive in, she's going to pull up actual budgets, show you the line items, and kind of how she's constructed that. So I'll stop there because she's way better at explaining all of that. And then after she's done speaking, we have our panel about getting more money, because who doesn't love getting more money? We have Jim, who's with the Westminster Institute in Westminster, Richard Wazansky, who is with Broadbrook Community, or helped with Broadbrook Community Center, and he's with Bold Moves Consulting. Kevin Weiberg with Vermont Community Foundation, Lisa Ryan with Preservation Trust of Vermont, Abby Solomon with Community Capital of Vermont, and John Michael Muse with USDA Rural Development. And Jen Stromston, our Director of Programs, will be facilitating that section. All right, can everyone see this lovely green presentation? All right, Bobby, take it away.
Great, thanks, Sarah. Good morning, everyone. So I'm going to start off by apologizing. I have a new camera on my computer today, courtesy of R.T. Brown, in case he decided to join today's call. So when I'm looking like this, you can see me, but the presentation's over here. So I'm working off from 2 screens. So I think at this point, we're all getting used to Zoom oddities, and you'll cut me a break on that. So just for those that don't know me, again, I'm Bobby Kilburn. I'm BDCC's Director of Finance and Grant Management. I've been with BDCC just about 5 years now, but not to date myself. I thought about it last night, and I have about 30 years worth of budgeting experience. So hopefully you'll learn something today, and I can pass on some tidbits. Some of what I'm going to talk about today is follow up to what Gary presented during yesterday's Part 1 of Financial Management Series. And you're even going to hear me reiterate a lot of what Gary passed along by way of information. Frankly, I don't see much difference between types of budgets. Each are basically a plan for how you're going to spend your money. That said, I did want to take the opportunity to dive into different types of budgets, or how people think of budgets differently, provide some tips, and walk through some scenarios, providing you with hopefully some tools and modeling examples that you can run with. Next slide, Sarah. So regardless of the type of budget, in addition to the budget being really a plan for the use of your money, it also provides a tool that reflects your organization's programs, your mission, your overall strategic plans. So I've broken the budget process down into 4 different buckets. One is a business, so this is your financial plan. This outlines the organization's financial and operational goals. Think of it as an action plan helping you to allocate your resources, evaluate your performance for a given year, and formulate a plan for going forward. I took a look at some of the areas that folks had some interest in learning a little bit more about and sort of aligned some examples. So I really see a business budget as a way to support establishing your fiscal policies and procedures and financial accounting for nonprofits and for-profits. The capital budget, we're going to talk about that. It's a process for evaluating major projects or investments. Gary touched on this yesterday. It's really a measurable way for determining the long-term economic and financial probability of any investment project. So this could be building improvements or renovations, that type of effort. Program and project, I've separated. I look at them somewhat the same, but in some cases they can be different. Program is really a framework allowing you to allocate your resources to different activities or programs within your overall budget. And it helps you to manage your organization's cash flow looking at programs individually. So for instance, if you were looking to expand a service provider program, you would want to potentially budget for that separately. And then project budgets are, what are your total projected costs needed to complete a project, a specific project, over a defined period of time? So this is really driven by the use of estimates as to what the costs for a project are, and really a phased approach to a project. And you're going to see an example of that later on. So for instance, if you were putting an addition on your facility, you may want to look at that project as very specific and contained in and of itself. Next slide, Sarah. So these are my top tips for success. And this is just, I made this up. So this is what works best for me. Number one is understand what you're budgeting for and why. This is really a guide to assist you in making better spending decisions. Use it as a way to identify areas for improvement. You know, I always tell people, don't look at budgeting as a hurdle. You know, have fun with it. I think it's fun, so maybe I'm geeky that way, but, you know, I would encourage you to do that. You know, don't look at it like, you know, as a process that, you know, the hair on the back of your neck stands up. It doesn't need to be that way. Know your organization. In order to understand what you're budgeting for and why, you really need to understand how your organization works. You know, for instance, if you're a seasonal operation, it's going to make more sense to break your budget down a little bit differently. And you're going to see that later on. I always take a calendarization approach to my budgets. So what I mean by that is I budget by month, as it really lets me sort of see the flow of funds and plan for a cash flow perspective. Build the right team. You should not be doing your budget alone. I mean, there are other folks out there that can help you think outside the box, understand your true costs, and folks that do the work can really provide perspective. Number two is my B category. Be realistic. I mean, you don't want to develop an unrealistic budget. So your budget should be based on historical understanding and future projections. You're going to see later on that I budget by line item, which really allows you to identify fixed costs, inevitable costs, line items that may fluctuate in the past, or one-time expenses. And this is really going to help you to be able to analyze and monitor your budget going forward, which you heard Gary talk a lot about yesterday. Be conservative. Unknowns are going to happen in a budget. You've probably heard the saying before, you know, you don't know what you don't know, but you know that you don't know something. So that is going to be the case. You know, Gary mentioned yesterday that he had a budget that came in within $5 versus actual. Kudos, that happens very rarely. So just go into your budgeting understanding that's going to happen. Be flexible. You know, it's okay to amend or revisit your budget during the year. And the way I do this is really through variance analyses. And that's where I compare my actual results to my budgeted results. So I don't necessarily change the budget, but it's a way for me to understand how that budget is going to change and evolve throughout the year versus actual results. Be detailed. The budget should align with your general ledger, and you're going to see that later on in one of the examples. There is a fine line between having too many general ledger accounts. You're going to see that BDCC has many general ledger accounts, but it really is specific to your organization. There should be a direct relationship between your budgeting process and setup of that budget and your accounting system. They should be in alignment. Be aware of your financial relationships. So you need to understand how your budget line items work together. So for example, if you're going to increase your workforce by 5%, you wouldn't just increase your payroll line, but you would also look at employee benefits, payroll taxes, and other items directly impacted by that workforce change. Utilize the right tools. I'm a huge fan of Excel, but many of your accounting systems probably have some budgeting modules. You need to figure out what works best for you, what allows you to work smarter, while giving you access to good information. And then lastly, I would say share the budget. You know, every budget has some areas that are sensitive, but you can roll that section of your budget up. I'm a proponent of sharing budgets with program or project managers. I believe knowledge is power in that case. Next slide, Sarah. So I'm just going to kind of walk you through sort of the way that I approach budgeting. You know, first off, determine your timeline. And you saw this yesterday in Gary's presentation when he presented that Gantt chart. You know, I start out by thinking about what my timeline is. What is the target date for approval of your budget? And this is really going to be specific to each organization. You know, we all have different fiscal years, operate differently on start and end dates of your year. So you need to understand when your budget's due. Do you need to involve your finance committee, the board? I like to set a target date for completion and then work backwards. So that way I know, you know, do I need to start my budget, you know, 6 months in advance, 3 months in advance? How's that going to work? Allow yourself time to do your budgeting. And I know that's easier said than done, but you really want to give yourself time during each step to define the process, you know, review your work and have discussions internally. If you need to have your budget approved in advance, again, this is going to be dependent on your accounting year. You know, you want to know that ahead of time. So my budget year starts 7/1 each year. I like to have mine done well in advance, entered into my accounting system. So you need to really think about that as you develop your timeline. Next slide, Sarah. So at the outset, you want to agree on your goals. You know, you are going to prioritize your program delivery goals. So this may involve, you know, program or project managers being involved in the budget process and understanding how they envision the program or the project impacting your strategic goals of the organization. Start these conversations early. If you have a number of program or projects, you've got a number of people to engage with. So, you know, hit the ground running and engage these folks early. Understand your organizational financial goals. So what do I mean by that? You know, it's going to be different for each organization. It could be top down. Maybe your organization's board tells you what the financial goals are for the year. It could be collaborative. Maybe it's a committee where you sit down and you look at your strategic plan and you develop this together. Or it could be based on management recommendation. So maybe your board says, you know, prepare the budget based on the strategic plan and, you know, make a recommendation to us. So it's really going to be defined. It's going to be defined by your organization. Regardless of how this is structured, somebody is laying out the goals, and you may be directly involved in that. Clarify your annual goals from the strategic plan. So regardless, again, of your structure, if you're for-profit, nonprofit, municipality, there is going to be a plan somewhere, hopefully, for the coming year or years. This is directly going to impact that budget process. Next slide, Sarah. So you need to understand what's going on. So again, I mentioned you need to know your organization. So as you develop the project and even going forward when you monitor, I would highly recommend tracking your budget to your actual results. And you're going to hear this throughout the presentation, and you heard this yesterday from Gary. You know, if you don't understand your financial situation, in my opinion, you can't budget appropriately. So you need to understand historically, current, as well as future. You're going to review your current year income and expense compared to your budget. So this is where your variance analyses are going to come into play. It's going to allow you to potentially estimate your year-end results. So for example, you know, I start my budget process right after January 1st. My budget is due and is effective July 1st. So as I work through the budget process, it allows me to estimate my year-end results. And this really helps me to understand my actual income and expenses for the current year and how that's going to impact things in the future. So a strong forecast at the end of the year will not only ensure you understand your financial position, it's going to make your budget stronger. It's going to help you assess the future of your organization and specific programs and projects. Are they sustainable? Can you continue moving forward as you are currently engaged? I recommend doing monthly analyses and reporting. Again, just reiterating what Gary said yesterday, don't fall behind. You know, the worst thing that can happen is you find yourself, you know, 3 to 6 months behind on either your accounting or your budget analysis, and then you have to play catch up. It just makes things more difficult. Next slide, Sarah. You know, at the outset, I would recommend agree on a budget approach. So whoever is, you know, involved in the process of budgeting, assign roles and responsibilities early. You know, who's going to do what? Who has the authority to make decisions? Is that you? Is that a finance committee? Is it the board? Is it, you know, your select board if you're a municipality? And agree on the unknowns. You know, how much uncertainty is okay in your budget? And go into your budget process understanding that at the outset. Next slide, Sarah. So any type of budgets, you know, it's pretty straightforward. You're going to have an income and an expense budget. Your income is going to be based on the structure of your organization. So it could be current fundraising, it could be revenue activities that are specific to a program. It could be grant funding. Maybe you have a program or a project that's going to have a grant component to it. It could be new income as a result of new programs or projects. And this is really going to allow you to see where are your gaps. You know, once you prepare your income and your expense side for a program, project, or just an overall business budget, you know, do you not have enough income to cover your expenses? Whoops, Sarah, did I lose you? Oh, there you are. And then on the expense side, you know, what are the costs that you're going to incur to reach your goals? And determine how those costs are going to, you know, align with your organizational and your strategic goals. Next slide. So I can't say this enough. Review, review. You want to verify that whatever budget you've developed really meets your overall program and organizational goals. Does it make sense? You're going to review, detail, and discuss your assumptions. So I would really recommend, you know, as you're budgeting and you're developing your assumptions for that budget, that you keep really good detailed notes. This is going to allow you to understand the variances between your budget and your actual results and be able to report out. So you want to use this as a way to tell your story. You know, what are the good things to tell and what are the things that maybe aren't so good, but you need to make folks aware of. make adjustments. As you're reviewing your budget, you're going to find areas where maybe you made a mistake, the fat finger mistake, or maybe you made an assumption that just doesn't make sense anymore, or your income or your expenses aren't matching correctly in alignment with your funding sources. And then review your final draft for all goals and objectives. And this is before you take it to the approval phase. So, understand what you put into your budget and does it make sense? You are the owner of that budget. Next slide. So sort of to wrap this up, you're going to go through an approval phase of your budget, documenting your budget, and implementing your budget. So, you have your final draft, you're ready to go. Do you have to present this to someone? Does it go to a budget team? Do you have a finance committee? Does it go to the board? Keep in mind, this is a key component of your timeline. So you want to factor this in as, sort of a solid time piece, a time that you have to meet the requirements for. If it requires board approval, how are you preparing that? Is it very detailed? Are you preparing it? Do you prepare it for someone else? Anticipate questions. What type of questions are you going to get from your board members? And are you going to be able to answer those? I recommend creating a consolidated budget spreadsheet and file. So each year, prior to the fiscal year, I set up, everything's done primarily electronically now. I set up a new electronic folder for the fiscal year. This is a place where I archive everything. So it has my budget, it has my modeling, it has my financial analyses throughout the year, it has my assumption support. It's sort of a one-stop shop. So if I need to find something to answer questions, I have a place to go. Again, keep track of your assumptions, maintain good and thorough notes. These assumptions can be used for future budget planning processes. They can be used as a way to support why you did something in your budget, and more importantly, why your budget didn't come out as you expected. So is the outcome and the actual results different? Why are they different? Assign management responsibilities. So if the budget's all prepared, if you prepared it, are you still the individual who's going to conduct the variance analyses and monitor your budget? Who's going to check for errors? Assign those roles and responsibilities early and build them into your calendar for the year. Incorporate this into your accounting system. So many of you may have systems that generate a budget for you. That works. Or maybe similar to like me here at BDCC, we use QuickBooks Desktop. So I actually enter my budgets by line item prior to the start of the year. So however you do this, you want to have alignment between your budget and your accounting system. And then you're going to have a whole bunch of monitoring and reporting. So again, this is where your variance analyses come into play, and understanding the financial position of your organization. Next slide, Sarah. So I just want to wrap this up. I gave you tips on sort of how I approach budgeting, but I also want to just provide some high-level tips on how I think about building a better budget each year. And it really comes down to aligning, strategic process with planning equals budgeting. It all works together. Keep in mind, short-term decisions can have long-term effects. So what do I mean by that? If you decide as an organization in fiscal year 21, you're going to give everybody on your staff a 10% raise. Keep in mind that if you do that this year, it has a ripple effect. So what does that look like in 3, 5, or 7 years? So think about that as you're making, strategic decisions during your budgeting process. I think of my budget as a living, breathing, and guiding document. I use it almost every single day. I'm always referring to it, and it's approved and it's in place, but I use it as a way of tracking against just my daily accounting and program budgeting. Your budget should have a narrative, and what I mean by that is I use my budget as a way to tell my story. So again, you want to tell the good, the bad, and the ugly, right? So, you know, when I report out to my finance committee or my board, I really do it in a narrative format. And it's a way for me to clearly understand the line items of my budget. So, you know, if your supply line item is way over budget, why is it way over budget? Write it down. It just helps me to sort of solidify that in my mind. Again, involve staff. So if you have multiple programs or, you know, projects, you're going to want to involve the managers, the folks providing oversight or that have the feet on the ground, if you will. Keep everyone in the loop, you know, let folks know what's going on. Again, I would say there's very little of a budget that's secret. You know, again, you can keep that sensitive work, you know, confidential, but others need to know what's going on. And then I consider budgeting an art and a science. You know, Gary touched on it being an art. I really do look at it as a science as well. It's a way for you to understand the gears of your operation. You know, how are things working together? Are they working together well? And is it a succinct operation? So I would leave it at that. Sarah, next slide. Okay, so let's get into some nitty-gritties, and I'm going to try to use some tools in Zoom, so bear with me here. This is an example of a basic nonprofit business budget. And I wanted to show you this because I use this for several different reasons. I use this, as you can see. Sarah, can everyone see my little tool here? Maybe do this. Okay, that looks great. So I always compare one budget versus the next. So in this case, this has my fiscal year 20 budget versus my fiscal year 21 budget. I want to show and report out what the variances are. Why is the budget from one year to the next different? I also use a calendarization approach, which you can see here. So I've broken this down by month. You can see in this case, it's not just taking, can I zoom the spreadsheet? Pretty small. We can do that. Sarah, is there a way to zoom in on the spreadsheet a little more? Perfect. Okay, great. Hopefully that helps. So you'll see that I have a calendarization, and in this case, you know, in some cases, it may be just simply taking your budget, divide by 12 and plug it in. In this case, that's not the way this is happening. And I want a budget true to form. So when I build my budget, I actually do it by line item. You'll see to the far left, the line items for the income and expenditures. That actually aligns with my general ledger for this organization. So it's no different. And then down at the bottom of this spreadsheet, Sarah, I don't know if you can scroll down a little bit. I'm also using this. This happens to be an intercompany. So we bill from one company to the next. So I use this as a way to report out on what the monthly invoice is going to be. And in this case, there was a special program that I wanted to provide some more details on. So I took the budget and I actually expanded on that so that when I reported out to the board for approval of this budget, they understood how I was coming up with the total expenses for this special program budget. So that's just a basic example. This is done in Excel, as you can see, and it's pretty straightforward. Are there any questions? Next slide, Sarah. So what I wanted to do is provide some examples of some multi-program, in this case I did nonprofit budget since that looked to be most of the folks that were here. Sample 2 and sample 3 I provided from some association websites. I know Kevin is here from the Vermont Community Foundation. They have a great website with lots of information. So I would encourage you to reach out and peruse their site, as well as the Maine Association from Nonprofits. So I just wanted to give you some opportunity to view some additional budget templates, if you will. But we're going to look at sample number 1. And we'll scroll in as much as we can so that you can all see this.
Hold on a second. Just trying to.
Sure.
Where did it go? I want it on my other screen, of course. Can you see that?
Sarah, if you want to, zoom in a little bit, would be great. So I wanted to, this is actually my budget for BDCC. And you'll see, Sarah, if you can just scroll down gently here. I start off with my income. This matches my general ledger identically. So I have all of my program revenue, my grant income that's coming in, and then my other income category, and then I go into the expenses. So this is what I mean when I say budgeting by line item. And this allows me to understand what's going into each one of these line item categories. This may be overwhelming for your organization, but the point is that it can be consolidated so that it works for your particular situation. And then, Sarah, if you scroll back to the top, this is going to go all the way down to one line categories here. But if we scroll to the right, you'll see, in that column A, that was my fiscal year annual budget. I always have a year to date. So in this instance, I had it through April. And then I estimated May and June, which gave me a year-end forecast in that column titled B. Then we have the over and under. From that, I then extrapolate into fiscal year 20. And again, I do this by month. So at the end, I have a fiscal year 21 budget. I can roll this up and I can make it tighter for reporting purposes. And then I also track my year-over-year budget variance, which is fiscal year 20 budget versus fiscal year 21. I want to know, why is the budget from one year to the next different, and how is that happening? But I also want to know, how are my year-over-year actual variances comparing to budget? So that's important for me to understand as well. And then all the way in the far left column is where I put all my notes and assumptions. So every single thing for each line item has some understanding as to how I got to those numbers. And this is really where I go back to. So if I get invoices and I start looking at line items and it's different than the budget, I want to understand why. And this is where I capture that information. So I just wanted you to see sort of the structure. I do most of my work in Excel, but again, it really needs to be set up as to what works best for you, and how is that going to achieve your goal. Okay, Sarah, we can move on to capital budgeting unless there's questions.
I have a question.
Yeah, Richard.
If you go back up to the top, what's the estimated what are you estimating by the month there?
So that's based on my actual results. Oops, sorry, you're over here. So what I do is, every single month I go in and I update. So once I close the books for the month, I then go in and I run reports out of QuickBooks that compare budget to actual. And from that, I then determine what I think my in this case, May and June expenses are going to be. Some of those you're going to know right off. Some of those you're going to have to estimate. It just really depends. Does that answer your question, Richard?
So give me an example. What would you put down for July 2020?
So in this case, so if we scroll all the way back over, so for instance, if you look at the first line, it says base rent there. So for July, I do a rent roll. I prepare a rent roll. We have real estate, so I do a rent roll based on my expectation for July 2020 through June 2021. And then I enter that in here. So there's some assumptions that go into that. What are we raising rents for our tenants? Do we have tenants that are moving out? Do we have vacant spaces already that we need to capture? So it's really looking at that. So each of these line items have some assumption and some underlying work that goes into it.
Got it, thanks.
You're welcome.
Bobby, Gary asked, what software for accounting do you use?
We use QuickBooks Desktop because we have multi-users and it's loaded on a network, a shared network.
Great. Shall I shut this down?
Pardon me?
Should I go to the
Yes,
next?
sorry.
That's okay.
Okay, great. So I wanted to move into capital budgeting and talk about this kind of at a high level. There's a lot that goes into capital budgeting depending on if you're a for-profit, a nonprofit, municipality. So we'll just touch on this slightly and happy to answer more questions. So you want to prepare, you have some capital work that you want to do. How do you do that? You're going to select some projects that add value. So capital projects are, as Gary mentioned in his presentation yesterday, they generally are longer term projects at higher costs. They're a project that's going to add value. So if you're a nonprofit, maybe it's more impact to your mission. If you are a for-profit, maybe it's additional revenue because you're going to pivot in a direction for new products and services. You know, it really depends on your organization. These are projects that continue over extended periods of time. So capital projects are generally projects that you're going to depreciate over 5, 7, 10, 15, or 20 years. Again, they're larger expenditures and you're going to capitalize those based on the useful life of the asset. So for instance, if you're going to purchase a piece of equipment and it's $20,000 and that equipment has a useful life of 10 years, instead of expensing it at the outset, you're going to capitalize it and you're going to expense it over 10 years. So that's sort of the example of you know, a fixed asset purchase. So it can include other things. It can include land acquisition. It can include equipment. It could be construction. In the case of BDCC, I also capitalize maintenance and repair to our real estate facilities. So at the cotton mill facility, it's an older facility. If we need to go in and replace 30 windows, that's a capital project for us. So it's not just new capital work, it can also be maintenance and repair of capital or fixed assets.
Bobby, I have a question.
Yes.
Is there sort of a standard for like the lifetime? You were mentioning like a piece of equipment that it will last 10 years. Like, is that assumed?
Yeah.
Is that like, how do you know that?
Yeah, so there's some guidance out there. You know, I would recommend if you have accountants or bookkeepers that you work with, you know, speaking with them to determine, you know, like a roof is going to be 15 or 20 years. A piece of equipment is probably going to be 7 or 10 years. Paving, you know, we do over 10 years because it seems like we do it all the time. So really just, there's rules of thumb out there sort of in the GAAP world on the accounting side. So I would recommend, you know, talking to your accountant, your bookkeeper. You can, you know, there's always Mr. Google. You can get some guidance in that sense. And then as you're developing these projects going forward, you're going to kind of get a feel for it. I don't depreciate much over 5 years, but if you're a smaller organization and you consider computers fixed assets, you're going to depreciate those probably over 5 years because computers aren't going to last much longer than that. So this kind of wraps up this slide in that, you know, what is the level of your capital outlay? That is really going to be dependent on your organization. At BDCC, our limit is $5,000. So any expenditure over $5,000, I put my thinking cap on and I say, is this going to be a direct expense or is this a capital project? So that is going to be dependent on your organization and your comfort level. I've worked with many nonprofits who their limit is $1,000, or it could be even less, $500. In that instance, that's why they would consider a computer a fixed asset purchase. I don't consider that a fixed asset purchase. So it really comes down to the comfort level of your organization and the size of your budget. Next slide, Sarah. So this is the way I approach capital budgeting. So this is just my sort of food for thought, if you will. So I start out each year by identifying and evaluating my opportunities. So one would assume that most organizations have lots of, they have a parking lot of projects that they want to do. So you may have a lot of options. What you need to do is take a look at those options and evaluate what makes the most financial and logistical sense in that given fiscal year. Once you've identified, you've narrowed your list down, you want to determine what makes the most sense to pursue, keeping in mind your business needs and upfront costs. So, if you have a list and you have on your list, IT improvements, and we need to buy 10 computers, but we want to put an addition on our facility. You need to kind of see what makes sense against your strategic planning goals for that year. You're going to estimate operating and implementation costs. So if you pick a specific project, what's that project going to cost? That's going to require internal and external research. So you're going to need to understand the cash flow associated with that project. So for example, if you have a project that you've chosen that doesn't generate direct cash flow, so for instance, IT upgrades, I always use that as an example. That's going to be probably a capital effort, but it's not going to necessarily bring direct cash flow into your organization. However, it may make you more efficient. So the efficiency gains have value. So you need to capture that and quantify that in some way. And that's really going to be, does it make you more efficient? Do you have more productivity as a result of those upgrades? Are you able to pivot in different directions and have better programming or project development? So really look at it and what is the value you're gaining from that? You're going to assess the risk. What is the risk of the project? Look at it as what is the amount of money that your company or organization can stand to lose if the project fails or it can't produce the expected results? You need to understand that going in. Once that's determined, you can then evaluate the cash flow or the mission-driven benefit if you're a nonprofit to make sure it makes sense to implement at that time. So what is your risk tolerance, if you will? Once you've gone through those 4 steps and you said, okay, I have a project, we're ready to go, I want to move forward, you need to have an implementation plan. So that means, how are you going to pay for this project? How are you going to track the costs? What's the process for recording your benefits? If it's more efficiency or productivity versus your cash flow impact. If it has direct revenues, that's easy to track. This step also needs to include key project milestones, and an end date. How are you going to track the project from start to finish? Because in capital work, in a capital budget, it does have a start and end date. So I have a couple of examples here. I won't delve into the line item detail. I wanted you to see 2 separate capital project budgets. The first is what I would consider more of a back of the envelope approach. So this is a farm expansion. So the farm wants to expand in some way, and it's going to involve them purchasing equipment. The equipment's going to cost them $10,000. They know that as a result of purchasing that equipment, that it's going to generate approximately $4,000 per year. So they want to understand, if they purchase the equipment for $10,000, and they're going to earn $4,000 of income over that time frame, how long is it going to take them to pay back that money? What's their payback period? So in this case, this is 2.5 years. So then they have to decide, is that make sense for them to do, and how are they going to fund this? Do they have the cash to fund it, or do they need to borrow? Those are the questions they're going to ask themselves. So these scenarios for those that have done this for many years don't include inflation, time value of money, that sort of thing. I didn't want to get too nitty-gritty in the details. So this is just sort of one example on how you would approach this. The second example is a for-profit entity. This is a project many years ago that I worked on, and it looks at this project over a 10-year period. So we know in the very beginning that we have cash outlays. We have to buy real estate, some equipment, we have some working capital. So we know the total cost of this project at the outset is $300,000. And then over year 1 through 10, we have sales as a result of this project, which is bringing in revenue. And we know we have variable and fixed costs. Down at the bottom of this slide, I provided some definition on what is a variable cost. So for instance, that would be, any cost that changes when goods or services change. So you have more labor costs because you're producing more. And then you also have fixed costs that don't change over time. So for instance, that would be rent. If you you decide you're going to do this project, but you still have to pay rent. It's not going to go away if you have more goods or services or less goods and services. And in this case, they have depreciation, which I won't go into the details unless there's specific questions on that. But what this modeling does is it says to you, this is what the money that's going out. We know this project is going to be a 10-year project. What are we going to make over the 10-year period, and how is that going to impact your cash flow? That is really the takeaways from this type of budgeting example. I'm going to pause there for a minute if there's any questions. Okay. Sarah, why don't we keep going here? I know I have a time limit. So let's move into program and project budgeting. And I'm going to separate them out for example purposes, but they really are very similar as you structure the budget. So a program or a project budget is, it's a framework under which your business allocates its resources for different departments, activities, and it helps you to manage the cash flow of the organization specific to that program or project. So it is going to be prepared specifically for a specific program or project, and it is only going to have revenue and expenses associated with that program or project. So a lot of you probably have multiple programs, multiple projects. You're going to roll all of that up into your business overall budget, and you'll see that shortly when we review a project budget or a program budget. But there's some advantages to program budgeting or project budgeting. It really helps you to determine your priorities. What projects make the most sense. It's going to help you in planning and managing the delivery of future services. So if you prepare a budget for a specific program and you don't have enough income to cover the expenses, it's going to help you spot those gaps. Do you need to go after more funding sources? Do you have to do away with the program because it's not sustainable? It allows you to make those decisions. It will allow you to monitor the allocation of your resources and determine how those resources are really being used to meet the goals of the organization. It's going to give you some insight into some areas for cost reduction. So how can you make improvements, or where are some expenses just too high? Do you need to do some, benchmarking of other organizations, your sister organizations or brother organizations? Do you have to get additional quotes? Really allowing you to dive into those line items. And then it gives your organization accountability. So probably many of you have programs that are grant funded. I use my program budgets as a way to report out to my funding sources. You know, I want to let them know what's going on, where are we really, you know, knocking it out of the park, and where do we have some problems. It's really important to communicate that if your programs or projects have grant funding, have you borrowed money, so you have lenders that you need to report to, across the gamut that way. Next slide, Sarah. Of course, there's always, where there's advantages, there's always disadvantages. So, you know, in the case of both program or project budgeting work, you know, if the budget's incorrect, it can really lead to increased costs. So, you know, again, going back to that planning, understanding, reviewing, and keeping good notes is going to help you to assess if there was an incorrect line item in your budget. Why is it incorrect? It really does take a lot of time to develop program and project budgets, especially if you have many. So that's, you know, definitely a disadvantage. It can be a time suck. So just keep that in mind. You can also have continual changes as a result of program or project budgeting. So for instance, you prepare the budget, you have a path forward, you lose a funding source. You know, how are you going to cover that? Or if some expenses came in a lot higher than you anticipated. So you need to be that's where that flexibility comes into play. The other piece to program and project budgeting is cross-year impacts. So what I mean by that is, for instance, my year is July 1 to 6/30, but I have programs that run January to December. So you have to factor that in. So you're going to have budgeting that crosses fiscal years. And I'm going to point to an example of that in the next example. Thank you, Sarah, if you could pull that up. So this is an example of a program budget that we have here at BDCC. And I wanted to point this out because I use this as a pretty detailed tool. So this is our Pipelines and Pathways project here at BDCC. This is a 5-year project, and I use this spreadsheet for many reasons. The top of this spreadsheet that you can see, and let me see if I can draw Sarah here. At the very top here, I keep track of all my funding sources. So if Sarah would kindly scroll down, you see that this project has lots of different funding sources. It has private foundation grants, it has a state grant, it has employer contributions. So it's pretty involved. They all have different start and end dates. They all have different timing of receipt of money. They all have different reporting requirements. So this is my placeholder to make sure that I know the funding sources for this project. Sarah, if you could scroll down. This project is a 5-year effort. So in every project budget that I develop, I always have the total, whoops, I draw, not text here. I always have the total project, not letting me do this, Sarah. Anyways, I always have the total project budget. And then I always have a reallocation line or column. And the reason I do that is because many funding sources, and in this case, a lot of our funding sources will allow us to reallocate between line items. I want to track that so that at any time I have a funder that comes to me and says, we gave you a $30,000 a year grant for this effort, and we want to know the breakdown of the funding sources, I can give that to them. And then that feeds into our revised total budget. So I track that for every program or project. In this case, this is a multi-year project. So you see it started in fiscal year 19 and it's running through fiscal year 22. The budgets are broken down for each of those years. But I also use this spreadsheet to track my grant requisitions. So in this case, given that the majority of this project is grant funded, most of our grants are cost reimbursement grants, if you're familiar with that. I track every requisition so that I know how we've expended these funds. So if Sarah scrolls to the left a little bit, you'll see that I capture each requisition in the time frame, and down at the very bottom, you'll see there's multiple tabs in this workbook, so that I can track for every single dollar how it was spent. And this becomes, this is a requirement as a result of audit for grant purposes. So this is just an example of a one-stop shopping model for a program or a project. So I use this, it's multifaceted. And then this, if you scroll all the way to the left, Sarah, you'll see where we track actual spending and what is remaining for each line item. So this then allows me to report to Jennifer when she comes to ask me as the director of programs, what's going on with this program? Where do we have money remaining? Where maybe haven't we spent funds that we thought we were going to? It's a way for me to quickly pull it up and say, okay, here's your line, here's what's remaining in your balances. This is where we have a concern. This is where we have additional money. Can we pivot and use these funds differently? That kind of thing. So this is just, as I said, this is an example of sort of a one-stop shop that I use to track a program budget. And then I use this to feed into my overall budget. Okay. Next slide, Sarah. So I wanted to give you an example of what I consider a more project type budget. This was for an expansion and renovation that we oversaw here. This is a large project. So again, don't worry so much about the numbers. It's really the structure in which I use this to track specific projects. This project had a specific start and end date. It had multifaceted sources for the project, and it had many different uses for the project. So we needed to track each line items, very detailed. So again, it has your final budget. And in this case, this particular project had 26 rounds of reallocations. So otherwise known as change orders for those that have done some type of construction type project. And then in this case, we had, an adjusted budget, we had some pre-closing expenditures, and then I needed to track the total expenses to date. And if you scroll to the left, Sarah, folks can see where we actually tracked the percent funded. So this is a fully completed project, so that's why it looks like it's fully funded. But this allowed me to know in each line item where I was off. So when we were 30% through the project or 50% through the project, it allowed me to understand that and then understand the remaining balances in each of those. So you can use this structure for a renovation project, a new construction. It's going to have more or less line items. And Sarah, if you scroll all the way to the bottom for folks, you'll see where I tracked the sources. And I see a question from Anne Marie, so I'll just pause. And so it's just a calculated field in that percent funded column. So it's taking the total budget versus the actual year to date, telling you what the percentage, how complete are you done with that. And I see a question from Lisa, but I didn't catch it, Sarah.
It says, how do you track when the budget FY is, I think, different from the grant FY?
Oh, Patience, no, that's not my. So that happens all the time to me. And what I have to do generally is when I have a program that is grant funded, when we apply for the grant funding, we do a budget. And then once the grant funding comes in, if the grant funding comes in, I then take that and develop a budget over the total program. And then I break it off when our fiscal year is. So if we have a program that's grant funded from January to December, I budget from January to June, compare that to the grant funding, and then I budget from July through December. So I break the program budget down to align with my fiscal year. I hope that makes sense. Okay, great. And then just to wrap this one example up, you'll see I have my sources at the bottom. In this case, this project had 4 sources of funding. I had to track each source different. So, I wanted to always make sure that my total budget aligned with my total expenses. In this case, this project spent all the funds that were available to it in some form or fashion. So you'll see that it was fully expended. Are there any other questions? Did I miss any, Sarah?
Lisa Ryan asked, are there templates available for groups that are looking to develop these types of budgets, and do we provide technical assistance?
Yes, so hold that thought. I'm going to finish this last slide and then I'll give you some tips for that and how to reach out for some support there. So I just wanted to wrap up talking a little bit about efficient budgeting policies and procedures and how to capture all of this information. So I would highly recommend you write it down. So as you develop your budget process, writing it out, your timeline, what are the next steps, making it part of your financial management policies and procedures, which if you don't have, I would highly recommend that you put in place. And your budgeting process can be a component of that financial management policy and procedure. So, if you win the lottery tomorrow and you move away to some tropical island, the person coming in behind you knows how to put this in place. So it's just a tool to have sort of at the ready. Good policies and procedures are guidelines for future plan of action that can be expressed with financial terms in a set period of time. So your policies should have a statement. What is the purpose of budgeting? Why should you budget? An applicability. How does this policy or procedure apply to your organization? How is your organization going to use a budgeting process? What are the roles and responsibilities? Who does what? Who are you accountable to? Is there a finance committee? Is there a board? Is there an executive committee? The administration, how are you going to administer the budget process? What resources are at the ready? What tools do you have? What suggestions? What tips? How does the approval process work? And how does the review process work? So capturing all of that, I find it useful. It's a good way for training. It's a good way for sharing the wealth and preparing for the next person that follows behind you. So to answer the question, I would encourage you to reach out anytime. I'm available. You have my email, phone number. If you need some technical assistance, please feel free to touch base. Not only am I available, but we have another member of our team, R.T. Brown, who many of you may know. He can also provide some technical assistance. There's a lot of templates out there. I noticed John Michael Muse mentioned that USDA has some. So using your grant funding sources is another good way to sort of tap into some examples, some models, that sort of thing. So, happy to help. Just reach out and, certainly use BDCC as a resource.
Great. And I will be sharing this PDF with everyone, so you'll have access to those links And you can grab Bobby's contact info. Are there any sort of last minute questions for Bobby? Bobby, are you sticking around till the end?
Sure.
Okay. So if there are any sort of burning questions, we might move on to our last but not least section of this training. So if you do have questions, go ahead and type them into the chat function, and we'll get some answers there. And then Jen, I'm gonna hand it over to you once you unmute yourself.
I got this. Hi, everybody. I was jotting notes now about things I wanted to ask Bobby a little bit, if that's okay. But I'm just looking and watching the chat. I'm not good at typing and watching the chat and listening. So I just want to make sure that everyone has a chance. Yeah, that's why you're here. You can multitask. I think that along the way, as I jotted questions, Bobby, you ended up answering most of them. But I just wanted to actually ask people a little bit about how did that make you feel? When we're watching Bobby's presentation, how much of that was like, oh, like, our general ledger and budget don't actually line up with each other. Or, we have a lot of processes, but I don't know where they're written down. So I just wanted to sort of, as much as people are willing to share, hear from folks about, where some things for like aha moments, or what are some things that you'd love to strive for, even if it's you can't see your way there yet. If you're not sure how you're going to get there.
Yeah, type those into the chat.
One of the things while we're waiting, just to see if, this is true confessions time, so I don't want to treat this like, I don't want to out anybody too much, but Bobby, you touched on this, and I wanted to just see if you would just talk for a moment before I start to, blow it out to the rest of the folks. So Sarah, should I have like the panelists introduce themselves? Can we do that? Okay. Yeah. So before I do that, I just want to see if, Bobby, you can describe a little bit more about the process of capital budgeting. Like, I know it's been a process for our organization to get to sort of more multi-year capital budgeting. And I was wondering if you could describe, especially because I think this is relevant to a lot of these folks here, how that process works between like staff and board. Like, how is that process, that conversation, how does that happen? And how have you sort of kind of grown that process over time, maybe to look a little farther forward?
Sure. So most of our capital work is associated with our real estate, but it's really not any different depending on your organization. So we actually have a capital needs assessment associated with all of our buildings. So like a parking lot list. So you may have a list of large dollar projects that you want to accomplish over a certain amount of time. We then take that and we prioritize it. So we say, we have a list of 20 items and we're going to say we want to get all of these done within 10 years, and we put them in little buckets. And we say, year one, we want to do this, year two, so on and so forth. Then what we do is based on money available, frankly, as well as the decision between borrowing or not borrowing, we then each year come up with a plan. So we say, we have these 10 projects we want to do, but we only have X amount of money, so we can only accomplish 5. And we actually assign a prioritization to those projects. We then internally at the management level take that to, in our case, it goes to the real estate committee, and we say, these are the projects we want to do, why we want to do it. Here's the payback for each of these projects, the benefits for each of these projects. So we do like mini presentations. So in other words, we have 5 projects, we do 5 mini presentations. Some of them may have a return on investment calculation. Some of them may just, we need to do this because the roof is leaking. you know, that kind of thing. So it really, we assign benefits to them. We then have a conversation. So it's really open conversation on, does this make sense? Does it not make sense? And how are we going to then fund it? So that's always a part of the presentation. And we make a proposal to, in our case, the real estate committee. Then it also goes to our finance committee and ultimately to our board. So it goes through 4 iterations of vetting, if you will. So, you know, that's the way that we approach it. And I can tell you, every single year that I've done this, we've gone to, you know, the powers that be, and they always say, nope, we're not doing this one, we're not doing that one. You're gonna have, this one doesn't have enough return, or, you know, this doesn't make sense, you need more information. So that's what I mean by starting early. You know, look at what you want to do early on so you can have those conversations. Does that answer your question, Jennifer?
Yeah, absolutely. That's great. And that's sort of a nice, that's sort of starting to do our segue to this next section, which is really, you know, about sort of finding more money. And I'm looking at some of the notes in the chat, and I think, you know, I mean, I think Lissa, I think, you know, in particular, who wrote, you know, the struggle is sort of integrating unrestricted and restricted funds, which, you know, it's really hard layering very different kinds of funding into your budget. And so I think that's maybe a piece that, you know, we can, you know, provide some support to sort of offline, and maybe some of the budget templates might help sort of pull things together in a way that's easier to present coherently. And then Anna Marie talked about, you know, just finding money is critical, and it's hard to think about it when everything feels like a wish. So I think that's, we're going to segue to the panel. We have a bunch of different people here, and I also, you know, I hope, Bobby, you'll still contribute to this piece, because obviously this relates. So, you know, we do a different session, as Sarah says, a little bit later in the year, that's around grant writing and sort of funding, and it gets a little bit more into the weeds on that. But we wanted to just talk a little bit more about, you know, why you choose different kinds of funding. I think most of us are aware of some of the various kinds of funding out there, but that's a very big amorphous thing, you know, of endowments and gifts and fundraising, and in some cases bonds, or, you know, other kinds of revenue streams. It's very different when you're looking at a very specific project or program that you're trying to stand up and make those choices. So we're going to sort of ask some of the folks, I'm going to ask everyone to introduce themselves, and maybe right out of the gate, give an example of, you know, maybe sort of some creative funding process that they think people should know about. And, you know, creative could be, you know, just normally people fund a firehouse with X, but, you know, so I want to think broadly that, you know, creative can simply mean deviating from, you know, just funding something from town, you know, annual tax revenue to a different kind of outlay. So I'm going to go down the list as it's written to me, so no preference given to folks. But first, Jim Matto from the Westminster Institute. I think I have the power to unmute. Is this true? I do. All right. Jim, I'm going to unmute you. Oh, I don't have the power. Sarah, you mentioned.
I got it.
Great.
Okay,
Introduce yourself. Yeah.
very briefly, I want to take 30 or 40 seconds briefly to tell people what the Westminster Institute is. Simply the name of a building. We call ourselves that. The organization is the Westminster East Parish, and we're not from Louisiana. The legislature in 1787, believe it or not, divided Westminster into an East and West parish. In the mid-19th century, they formally drew that line, which was nice, but still relatively meaningless as far as I know. In the 1890s, they granted the East Parish limited municipal authority. So we could tax, actually, but we've evolved our mission to serve the whole town, not simply the east side of the town, and we can't tax the west side of the town, so we don't do that. But we can own property, we can raise funds, we don't have police powers, we can't zone or anything, but we do have those municipal authorities. So that's what we are. We're not a part of the town legally, and we're not a 501c3, though we look and act like one. The biggest challenge we've had is that in the first 50 years of the organization, they raised money from some local leaders and generous donors and built the Westminster Institute. Got some money from a fellow in Boston who died and remembered his childhood here, named Isaac Butterfield. left money for a library. That's why it's called the Butterfield Library. And they set up an investment fund, which we still use today, 100 years later. But for 50 years, the organization was pretty static and drew on that money. And in the next 25 years, they continued to draw the money pretty much at the same rate, even though the market didn't stay the same. And that was a problem. We've had to figure out what to do in recent years, and we've decided to diversify, number one. So starting last year, for the first time ever, we received limited town funding. And right now, the funding that we request from the town and that we got this year funds only 10% of our budget, but it's an important 10%. We are fortunate in that the building, as the building use changed over the years, we ended up with some underutilized space. And so we moved away from the traditional mission of simply running that facility and started renting. We rent office space to 2 nonprofits, and that brings in a significant amount of money. We outreached a lot to the community to make people more aware of the facility and renting it for parties, for exercise classes, you name it. We raised those fees very modestly, and that brought in significant, small amounts, but for us, significant amounts of money to help things run a little better. This year, of course, we have a June 1 to May 31 fiscal year, which is odd, but that's what it is. And now at the end of the first month of this fiscal year, we might almost be ready to actually figure out what the budget's going to look like, because the building is closed. And when you close the building, you kind of lose the income from a lot of what you were doing in there. So we have to struggle with that, but we think we're okay. We also did receive some foundation support to remove some of the 1950s interior changes that were made and restore some of the original architectural integrity of the building. And but the big thing we found, and I'll wrap it up with this, anyone has questions, I'm happy to help with that. But as I said to Jen the other day, I'm going to leave with a lot more information taken with me than I'm going to leave for you. So I'm happy to report that that's true. But the main thing we found is that when we reached out to people, we found that people in town generally didn't know what the Institute was. You could ask 10 people and get 12 answers. But when we did reach out and explain what we were doing and what we were trying to do and ask for help, we got not resistance, but really good appreciation and comments like, well, it's about time. And yeah, how do we help? And here's a donation, and unanimous support at town meeting. So basically taking a 100-year-old organization that hadn't changed much and breaking out of that shell and opening up turned out to have been both difficult and the best thing we could have done. And we're still looking around for additional money because income isn't looking like it's going to skyrocket anytime soon, but we're pretty confident that we're going to be okay. That's it.
That's awesome. Thank you. And that's actually a great segue to the next person. Oh, I like that you guys don't know who's next because you can see my list. Richard Bazansky. I'll stop touching it. Thank you. So Richard, I wanted to, same thing, one of the reasons we asked you, I know that you do a lot of things, but one of the reasons we asked you to speak was, in relation to the Broadbrook and sort of your role in that. So I think let's let you take it away.
Okay, I'm Richard Wizansky, W-I-Z-A-N-S-K-Y is the correct spelling of my name. And I'm a principal with a partner in Bold Moves Consulting. And what we do at Bold Moves Consulting is to consult to mostly nonprofit organizations on how to raise philanthropic funds. And philanthropic funds should be definitely a part of a revenue mix. Revenue mix, as Bobby pointed out, should be very diverse, and the philanthropic portion of a revenue mix, of your revenue mix, should be very diverse. It should include contributions from individuals, contributions from foundations, contribution from government sources, that's federal, state, and local sources. In regard to Broadbrook specifically, what we did for them was they were renovating the old Grange, and they called in us to see whether basically they could raise the money. And what consultants like my partner and I do is that we do a feasibility study, which basically it becomes a test of whether a certain money can be raised and how much money can be raised. And the feasibility study in regard to Broadbrook Community Center was working with the board to identify specific stakeholders, specific folks, talking about fundraising and individuals. You're talking about two things, capacity and inclination. So the capacity refers to how much capacity that individual has to give, but it's equally important for that individual to have the inclination to give to your organization. And if the individual doesn't have the inclination, then you might think about how to cultivate the inclination. And sometimes cultivation takes a long time. So we worked on a set of questions, which is usually what a feasibility study is. And then we conducted a series of interviews with the individuals that we had selected to interview. Now, a feasibility study is also something else. It's a cultivation tool. So that when you're presenting, when you're having a meeting with an individual, and you're asking that individual a series of questions, such as, part of what you want the feasibility study to do is you want to ask that the person that you're interviewing, do you think that this is a feasible project? Why is it feasible? Do you think that an organization like the BBCC can raise the money? Is the project a worthwhile project? There's a whole series of questions that you develop to ask. But when you're asking those questions, you want the answer to those questions for sure. But what you're also doing is you're cultivating the individual to become interested in the project. And the interest in the project is a sort of an indicator of when you go back and you are fundraising, what you've done is you've facilitated the investment of that interviewee in your project. And what you've done is you've cultivated that person who may then be more interested in making a contribution to the project. Is that clear? So that's in regard to the BBCC, it's a feasibility study. With the BBCC, we had a very successful feasibility study because I was doing the interviews. I did all of the interviews. I brought a board member with me, usually on the interviews. And there were several times where the person that we were interviewing said, oh, this is such a great project for Guilford. Guilford really needs this. And, you know, when you're coming to think about me as a donor, put me down for $100,000. Well, that's the kind of news that you want to hear. And that does happen with the feasibility, not infrequently, I would say. So that's what we did with the BCC. Just in general, fundraising, when you're making it, you should definitely make it a part of your funding, of your revenue stream, particularly if you're a nonprofit. And the way that you go about doing that in very simple terms is you want to have a fundraising plan. That is that you actually, you actually create a fundraising budget that articulates what your expectation is of money that you can raise. And if, let's say that your budget is that you want to raise $500,000 in philanthropic funds, well, then you need to, in your fundraising plan, identify where that money is coming from, so that you might say, you might articulate in your fundraising plan, well, we're going to raise $300,000 from individuals. And then what you're going to do is then break down your $300 from individuals. You're actually going to put names down of what the expectation from each individual is going to be. And then you're going to do the same thing with foundations. You want $250,000 from foundations. You're going to indicate on your plan which foundations. Vermont Community Foundation, you're going to put down for $50,000, and in a column, and you're going to have two columns for, you're going to have what you're going to ask for and what you're going to expect. So you may ask for $100,000, but then you have to noodle around in your mind. Well, if I'm going to ask them for $100,000, my expectation is we're going to ask for $100,000, but to make my budget accurate, I think that they're not going to give us $100,000. I think they're going to give us something more like $45,000. So in your expected column, you're going to put $45,000, but you want to ask them for $100,000. And you should be bold. That's why my company is called Bold Moves, because we believe in being bold, asking for money. The moves part of it refers to, and this is what you should all know about fundraising. I should wrap up now, right, Jen? Because I'm talking too much.
Sadly, just because I have four other amazing people, but I could listen to this all day. So,
okay. So anyway, the moves part of it is that when you're fundraising, you fundraise with what's called moves management, and what you're doing is that you have a series of moves, whether it's an individual or whether it's a foundation, which bring you closer to that funding source. And that means that you perhaps do a series of events or a series of visits that are moves which bring you closer to the funding source, which then, brings you closer to getting the contribution that you want. And you manage those moves. They're not random. Every move that you do is thought out very well, and it's a process of cultivation, because the only way that people give is if they have affinity with your group. Remember, I said capacity and inclination. Well, inclination could also be called affinity. So you want to create affinity. And the last thing I'll say is, I'm going to say two last things, is that people do not give unless they are asked. It's a fundraising principle number one. You have to ask. If you don't ask, you don't get. So the money doesn't fall out of the sky. You have to ask, and you have to have a process of how to ask and what to ask for, and then a series of moves that are managed. It's called moves management to get to the funding source. And then the last thing I'll say is that you want to create a case statement. Why should you want to know very well, and you want to have articulated very eloquently and powerfully why someone should give to your project or your organization. And we call that creating the case, making the case statement. And in my company, that's one of our specialties. We are able to interview the organization's board and the organization staff and hear their vision and hear what they want to do, and then working with them, create a case for funding. That's what the case statement does. And usually, it comes in a brochure that the writing is great, the graphics are great, and it's very simple, but it's something that you can hand to the donor and say, well, if the donor is asking, why should I give money to you? Well, you have your case there. Whether you write it down in a case statement or not, you as the person seeking contributions should know very well what your case is, why someone should give. And you don't say, because we're a great organization. That's not what you say.
Richard, I'm going to stop you there just because we're running low on time, but I just want to say, really, I have seen a lot of organizations get feasibility studies done that were not what you described. And I really urge all of the folks here who do fundraising to listen to what Richard's saying, to even consider reaching out to Richard and his company, because a feasibility study is not a list of anywhere that could possibly give money. It's a very different thing, and it's really easy to waste money on a feasibility study.
Yes.
And I think so. There is a process, just like with the budgeting, as Bobby outlined. What Richard's outlining is sort of how to really build a fundraising program that can grow and fuel your organization over time. That's my background from way back in the day before economic development broke my heart and and took me with it. But anyway, so we're gonna nice transition also to, I'm gonna unmute Kevin from the Vermont Community Foundation, and I think that's sort of a different set of relationships. And so Kevin, I can't see you, but I'm gonna unmute you, or I'm gonna try to. Sarah's gonna help me.
I just unmuted myself.
Great.
Is that okay?
Yes, absolutely. And yeah, if you can introduce yourself and kind of pick up where Richard left off, because I think relationships with funders like you
Exactly.
is different. And I think you can kind of broaden everyone's understanding in a different way.
Yes, and thank you. I'm really pleased to be here today on such a beautiful day after 90-degree weather. And I hope everyone is ready for a great weekend. Pretty much, I could say ditto both to Bobby and double ditto for Richard and what they've just said. But the one thing I wanted to emphasize, I think, when I was listening to Richard, is you have to have a passion for what you're doing, and you have to be able to instill that passion in others. You have to sort of present a case of urgency, but the urgency is not around potential crises, it's about opportunity. So think about the urgency of opportunity when you're working with fund holders or other people of means to help you support some of your larger projects. One of the things, so I'm with the Vermont Community Foundation. I'm on the Grants and Community Investments team. We have two teams. My team runs the discretionary grants programs. And then my other colleagues work with our fund holders, people of means who love Vermont, may very well love your part of Vermont, to help them find and fund the things that they love. We have about 20 discretionary grant-making programs at the Community Foundation that I help to oversee and implement. After this year, the numbers are going to change incredibly, but typically we would be putting out about $18 to $20 million a year goes to the Community Foundation out into nonprofits around the state of Vermont. Of that, only $1 million is at the discretion of staff. So a lot of our fund holders are very active and very connected with the causes that they love, and they will go ahead and make those gifts on their own. So building relationships for capital projects and building relationships for securing grants is incredibly important. One of the things I thought I could offer you with my background and experience is, well, first of all, I'm not a finance expert. Thank God you have Bobby, but you would not want me running your spreadsheets for BDCC. But what I am more of an expert in is looking at people's requests for money and how people approach funders and what makes a strong grant proposal. So I want to just pick on a few things that have already been actually highlighted by both Bobby and Richard to talk about with you. But Bobby had talked about a budget narrative. And it is really important to have a budget narrative because some funders will want to be able to read your budget and the accompanying narrative, which explains costs, and they're going to want to be able to have a very good picture of the project or program you're proposing. So you need to be planning your program as you plan your budget simultaneously. So I always advocate for, don't bring Bobby in at the very end and say, here's this great program that we want to get funded. You want Bobby in or her team in at the very beginning saying, this is where we think we're going. And she will be able to help you understand what kind of costs, how to put things into cost categories, what's eligible, not eligible, what are some internal agency costs that you might not be aware of as a program person. So know that budget narrative is really important. Reviewers, when they're looking at a budget that comes with a grant proposal, some of the things we're going to kind of automatically look at are any big variations, or if you have a large deficit, or if you have a large amount of unrestricted cash in a savings account or whatever. And is it restricted or unrestricted? Sometimes we will get requests from very large organizations that are sitting on hundreds of thousands of dollars, and they're looking for $1,000 to repair a freezer or something like that. And so a funder is going to look at your budget and your budget narrative and your financials, I should say also, and say, well, why aren't you paying for that with your unrestricted funds? So you have to make a really good case for your request. Your budget needs to be reasonable, no more or no less than what you anticipate or estimate will be needed to complete the project at hand. Some funders, and we're not looking for the cheapest deal in town. We're looking for a reasonable budget that has a high likelihood of being implemented. So don't ask for too less. Some funders won't consider budgets of less than $5,000, for example, because they don't see that as maybe achieving the level of impact that they hope they can with their resources at hand. The biggest reason why people, I think, fail in grant writing and other elements of fundraising is they fail to follow directions and they fail to implement best practices. And both Bobby and Richard today, I think, have hit on some really important ones. There is an understanding that budgets are estimates. Things will change over time. I imagine a program that was planned last July looks very different this July, for example. And in order to sort of be able to navigate those changes, you really should be looking at your funder as your partner, and the importance of building relationships. I used to work at an organization where you had a large federal grant, and this was millions of dollars, and and we thought we had the great idea, and at the end, 3 months into it, we realized there was no way we were going to even start achieving our goals. So because we had a really strong relationship, in this case with a federal agency, we were able to call in and say, we've got some problems here, and here's what we're proposing as a solution. So that builds credibility between you and your funder, as long as they understand that you're not hiding information or kind of postponing the inevitable. So consider us as partners, that we do want to hear from you, and we want to be able to answer your questions. Other things that I've seen people sort of mess up on are there are such things as allowed and disallowed costs in certain grant programs. In our small grant programs, for example, we don't allow administrative or overhead costs. Tacking that onto a $3,000 grant does not seem very impactful for us. So when we get an application that includes administrative costs in their $3,000 budget, that raises a lot of doubt and questions in the review as to, are you credible? If you can't follow instructions, how can I trust you to actually implement a program successfully? Other things to look be aware of, and I think Bobby's team will know a lot about this, are there bid requirements for certain things? If you're hiring a contractor within your program, if it's a federal grant of a certain amount, you'll have to have so many bids. And you don't necessarily have to choose the lowest bid, but you have to make an argument for what you believe is the best bid for your program. Always call a fund holder when you have questions. We're here to listen and help you and sort of help you problem solve. We don't want to take your money back. It's really hard. It's complicated to take money back as it is to give out. And in some cases, it's even worse. But if you mess up, we may be forced to do that. Not at the Community Foundation, though, because we are really awesome and we are really flexible with our grantees. I spent 20 years seeking money and hope to finish my career giving it away. But I will say that with private foundations, the development of personal relationships becomes really, really important. I'm just trying to think if I have anything else to offer. I've been watching the chat, and I've gotten so much out of this just as listening to other people. But If you have any questions about private philanthropy and you know how we look at budgeting, I'm happy to take things offline. Hopefully you'll have access to my email, and really would love to continue the conversation. But I'll cede the rest of my time so that we can get other people's.
Yeah, and I apologize to everyone that we're sort of going over, but I think there's a lot here, and we kind of scaled this down to what we thought people could stand on Zoom, but I think we're all doing well. It's really engaging, and this is recorded, so if you need to jump off, you'll be able to catch the rest of the content. And I sort of just want to, you know, keep going in this vein. I really appreciate it, because I think, you know, not only is every single thing that everyone's saying, you know, interesting and relevant, also a lot of what we try to do with our events is to create, you know, just what you were saying, Kevin, create that direct personal relationship with funding. So yes, we will share emails and reach out to Kevin. I'm going to ask Lisa Ryan from the Preservation Trust next to unmute yourself and sort of follow suit, introduce yourself, you know, give your kernels of wisdom and kind of help people understand. I know one of the reasons we were inspired to call you, I just want to say, is we, in the stewardship conference, 2 different organizations talking about projects really cited the technical assistance from the Preservation Trust as pivotal to their moving forward successfully, developing new strategies, especially around funding, but also just more organizationally. So that you guys came up a lot.
Great. Yeah, so thank you for having us. My name's Lisa Ryan. I work for Preservation Trust of Vermont. We are a statewide historic preservation nonprofit whose mission is really in assisting communities and nonprofits and municipalities who are trying to reuse historic buildings, revitalize village centers and downtowns, and bring new life to their areas. So you know, one of the ways we do that is through offering technical assistance. So I want to just make sure I'm clarify. So we are a nonprofit. We're not regulatory. We're not state government. We're funded by private donors. So we too are in the world of fundraising for our own organization. We work with a lot of foundations. Our real role is to help build capacity at the local level. So we try to do that through partnerships. We do that through offering small technical assistance grants, by connecting communities and projects with the people who can help them bring their projects to the next level. We also often offer a series of workshops. We've been trying to transition that to online since we aren't able to be together in person, but those workshops include things about fundraising from individuals. It includes you know, workshops for very specific project types like municipally owned buildings or libraries. We do a workshop for arts organizations, for sacred places. And within the context of those workshops, we do talk about grants, foundations, private fundraising. So, you know, what our role really is to help you to put together your project and approach it strategically. You know, I've heard a lot today from different folks, including Jim and Kevin. You know, fundraising is really about strategy. And, you know, Bobby talking about, you know, being able to do a budget, that's all really important. And I think for a lot of nonprofits, especially smaller nonprofits that maybe are working with a lot of volunteers or only have part-time staff, one of the biggest challenges is how do you strategically approach that? What step do you take first? What step do you take second? At what point in the process do you approach a grant funder versus going out to seek individual funds from individuals and do fundraising from individuals? So those are all things that Preservation Trust of Vermont can help with. You know, we were very involved with the Guilford Grange project, the Broadbrook Grange project. You know, we're mostly a technical assistance provider, although we do have some small matching grants that are aimed at helping you connect you with people to do technical assistance. And occasionally we have larger bricks and mortar grants. When we're fortunate enough to receive those grants, then we can re-grant those. But really our role is to help you strategize around your project. You know, we work a lot with groups like the Vermont Division for Historic Preservation. They are a branch of state government. We work with USDA Rural Development. I know John's going to be speaking in a few minutes. We try to help connect folks with grants at the Community Foundation, other private foundations. We work a lot with the Vermont Community Development Program, which is another federal funder. So the role we can play is really helping you to strategize your approach when it comes to fundraising. So I'm going to put my name and email address and our website into the chat bar. Because if you are working on a project and you want to talk with us, you know, again, historic buildings is definitely an area that we're interested in, but community and economic development in our downtowns and village centers. So don't be worried if you're like, well, I don't know if my building's historic. If you're in a designated downtown or a village center, if you are a library, if you're a municipality, and you just want to explore what your options might be in terms of working with us, I would encourage you to go look at our website and to contact me or one of our other field service representatives so that we can work with you. You know, one of the things that we try to do is we try to organize all funder meetings. So if you get in touch with us and you said, you know, here's our project and we've been told to talk to this person and that person, and you're doing all of that sort of like one-off phone calls at a time, let us work with you so that we can pull together a group and talk all at once, because that way all of us can work together to strategize and really help, you know, get your project on everyone's radar at the same time so that we can kind of plug in where it makes the most sense. I hope that's enough info for this. I'm going to just put my contact information in our website, and I'll look forward to hearing from folks in the future.
And I can
I muted myself because of the kids outside. Sorry.
I can, when I send out the recording and the presentations and whatnot, I can include everyone's contact info and whatnot, so it's all in one package.
And that last thing that you said is gold. I think that that all funders meeting thing, I think for folks to understand, you know, that especially in Vermont, funders and organizations are really used to collaborating with each other, but a lot of times the folks leading a project don't understand that that's just this incredibly powerful method. They don't know how to convene that. So that's a terrific thing to bring up. Thank you. We may have lost. Did we lose Abby Sullivan from Community Capital? No.
I'm still here.
Oh, sorry. My searching was terrible. Thank you. Abby, please introduce yourself.
Hi, I'm Abby Solomon. I work for Community Capital of Vermont. I'm the loan officer there. We are a nonprofit mission-based lender. Fortunately, my responsibility isn't to find funding, so I can't really talk much on that, but I can talk about what we can provide to nonprofits, because our mission is to lend to businesses and entrepreneurs that are having difficulty finding funding for their business for various reasons. And as nonprofits, banks aren't necessarily comfortable lending to nonprofits, but we can. And we have a few different products. Obviously, term loans are a main thing that we can provide with a $50,000 max to nonprofits. But we also have a line of credit option, which is really how mainly our nonprofits that we've lent to have used our services. So there's a very similar application process to any sort of commercial loan. Nonprofits do have some issues because there isn't a primary owner, so that's something that we have to work with the applicant, whoever's doing that, to figure out who. There has to be a person assigned to the loan. It can't just be a business. But when we figure that out, we can work with you, and because we work with businesses and people that are having issues finding funding, which is for a for-profit, is usually because they are a startup, or they have collateral, limited collateral, or credit issues or things like that. So when we work with nonprofits, we can use that creativity that we work with for-profits to figure out types of collateral or ways to structure the loan that works for you and will work for us. So the few examples we have a few nonprofits that have line of credit, and what they use that for is various reasons, but they can be bridge loans pretty much. So one organization will get match grants, and they have to put the money out front, but they don't necessarily have that in the budget. So they have a line of credit with us that is actually collateralized by this annual grant that they are insured that they can get. And so we know that they're going to be able to pay it off. It's going to be a few months, and they'll have that money available to them. And then every year we do reevaluate all our lines of credit. So if that grant program has changed, we can possibly provide a larger loan for them so that they have the full amount next year. Or if that is not an opportunity anymore, that's when we might pull back and not be able to provide that loan anymore. And then other organizations use it just because they know that they're very seasonal, and there's a part of the season that they know that they're not going to have any income coming in. They're not going to be able to pay their employees or something, and they want to have that line of credit there so that they can draw down on that in order to, and then when they're busy again, they're able to pay it off. Our lines of credit, so month to month, you pay interest only on them, so it's a very minimal amount. And then one time during the year, you do need to pay it down to zero to qualify for the next year. And then the term loans, honestly, we only have, I think, one nonprofit that has a term loan with us. And that is, they just couldn't find a grant or another source of funding to make a purchase of a equipment, and they needed to look for other resources. So in that case, it's an object, so we have collateral for that. But along with that, when you become a borrower, we have free business advisory services. So David is our business advisor, and he's available to answer any sort of question. And he also teaches QuickBooks classes for free. So that's a great introduction to the program and how it works. And then he's always there as a resource. He's done one-on-one with people if they need help with QuickBooks. So we kind of feel it's not free money. We are collecting interest on the funds, but it is an option to kind of piece together when you need to figure out how to get that last bit and you can't find the free funding. We're available for that. So you'll have my contact information too, and I'm the one that deals with all the way from inquiry through underwriting and extending the loan. So we are available for that at any time. So I can answer any questions via email. I'm happy to do that about what our process is and what we have to offer. But our website is really great for that, and there's our application right on there that has a list of what you would need to provide. That budget aspect, that is really helpful because we require projections, which are pretty much 2 years of a budget. You need to provide that so that we know what you will be able to pay for being able to sustain a loan payment. So budgets are obviously important, but they're really important when you go looking for additional capital. So that's really quick because I don't know much about procuring grants, but that's what community capital has to offer to nonprofits.
That was terrific, and thank you. And that's a perfect segue to our last, to us, most important speaker, because it is the USDA that makes this program possible. I'm going to ask Max Muse to talk in a second. I just want to highlight something though first that Abby talked about, which is that technical assistance. I know that some organizations avoid looking for debt or lines of credit or things like that, or they're trying to find money that isn't so complicated. But a lot of times when you get into a relationship with a different kind of institution, you start to get better kinds of support and training and technical assistance, and it's one of the best reasons to go down that road. And we have some USDA backed lending as well that's for businesses. It comes with technical assistance, and folks go and get Quicken classes. They go and they get help with accounting or marketing, and there's just nothing like it to sort of increase the effectiveness and the capacity within your organization. And that's this program is all about increasing everyone's sort of capacity and knowledge to be able to do more. So with that, Max, I'm going to let you take it away and wrap us completely up.
Thank you. I hope I can do that. I won't go into all the detail that everybody else has. I got to say that this is rich in content and one of the best programs that I've seen in my 30-year career. So congratulations on providing such a great workshop. I hope this is pushed out to some of the media contacts to be able to be seen, because I did a great job. As Jen indicated, John Michael Muse, also known as Max, please use that freely. I work for USDA Rural Development. USDA is a very large federal agency, national agency, created in 1862 by Abraham Lincoln, been around a while. Rural Development is the economic arm of the department that only focuses on rural America. We're the only federal agency that targets rural areas, which is defined by population, basically, that invests. We are a community and economic development agency that meets our mission of increasing economic opportunity, improving the quality of life by financial investments. So we have 40 different programs we administer, from business operations to utilities, wastewater treatment facilities, to not-for-profits and municipal, as well as single-family housing. So we literally can build a community from the ground up. I think for the audience here today, our not-for-profit and municipal lending is probably what you're most interested in. No one likes the word debt in the not-for-profit or municipal world. However, there is debt that's better than others, right? The other thing to realize with the partners on this video call is that rarely you're going to find one funder that's going to do it by themselves. You're going to find multiple sources of funding. We look for our equity first, and then we have to talk about the D word, debt, right? So as Lisa Ryan indicated, I call them strategic funding meetings versus, the funding type things where, yeah, tell your story once to multiple people that may be able to assist you. I put some documents in the chat feature. One's a Vermont comprehensive document that has funding, and then there's some links to rural development. I think, one of the most important thing when you're seeking funding, whether it's a grant or debt, is to ask that entity, what's the path to yes? Don't take them, because a lot of people describe to you what you can't do with money. You want to know what you can do with the money and how you can get there. I never, ever want to tell someone no. I want them to make that decision on their own. So I will outline the process of what you need to do to be able to secure the funding or not. Drilling down a little bit to the funding, timing's key. Your project, your operations, all have timelines on what you want to do, when you want to do it, how you want to do it. That's very important to ask the funder too. Federal agencies, we're on a fiscal year, we get money, we exhaust it, we have to wait for reallocation from Congress. Other entities might have funding all the time. Banks have money all the time. So those are some key things to think about when you're approaching the discussion of funding. Rates, terms, loan to value, all critical things. I really do a real fundamental assessment when I'm looking at someone that's looking to maybe move from renting a building to owning their building. I'll find out what their rent payment currently is. I'll take the amortization factor for our interest rate. I'll divide it into it, and it's going to give me a dollar amount to figure out what that looks like, to give a really back of the napkin type assessment. So rural development debt, just so you know, for not-for-profits, it's probably the best financing you're going to be able to find. Municipalities have the bond bank, and they have rural development. Very, very competitive interest rates. However, there's two differences. And this is something you want to think about it. Don't go it alone. Go with some entities, whether you have a consultant or you have someone that's going to guide you along the way. The bond bank will let the municipality go with their own. The not-for-profit sector, not so much. You can get money from a bank, but they're going to have some strings attached too. Rural development, we have a lot of criteria we're going to impose on a project. However, we do these projects every single day. You might be doing them once in your career, maybe twice. Not to say you can't come back to us for multiple things. Our financing rates right now are 2.25% fixed for not-for-profits and municipalities. When you're evaluating your project and moving forward, you know, there's no better time if you had to take on debt to do it. These things take time to develop. The interest rate environment's key. Our interest rate is fixed as well. So when you talk about an organization's cash flow, budgeting, stable and reliable debt is important so that you don't have a variable interest rate that might give you some heartburn down the road, or a balloon payment or something like that that might cause you some trouble there. We can finance 100% of projects. That's very rare for a loan to value ratio to see that as well. And our term can be as long as the useful life of the asset. So I think Bobby indicated, you know, we talked about depreciation schedules. Real estate for us is 30 years plus. Vehicles, you know, will stretch it longer than a commercial entity would, if 7 years. And then depending if it's equipment like computers and things like that. Other thing when you're looking at financing and funding is don't let the money lead your project. Let your project lead the project. If it is a good project with the feasibility and the financial analysis and it stands on its own, you will find the money eventually. But if you chase after a source of money, you may go down a place where you're going after the dollars and you stray away from your project there. Let's see what else here. Sustainability. There's one thing about getting money and getting something up and going or continue operation, but you want to make sure it's sustainable. And this even goes back to the passion of the entity. I've dealt with more organizations in the region that had a great passion. They were the leader. We funded them, and then all of a sudden they left, or they died, or something happened to them, and that passion didn't exist and wasn't stayed with the entity. That's a challenge. You have boards that you can build out. You have executive directors. Things like that. Those are really key things to look at as well. You know, this is a wagon wheel, right? It's not just about the budget. It's not about the income statement, the balance sheet, feasibility, or the financing. They all work together for your project to move ahead. Jen, you asked about pitfalls. I think I mentioned timing. That's really good to understand. Going it alone, don't go it alone. I call it the community of Vermont. I think between VCF and Preservation Trust and ACCD and all the entities, we see each other at more meetings than we probably see our family members. So you know, we all know each other. We all know the money. Don't go it alone. Reach out and ask for assistance. We can help you with that. Talked about not letting the money drive the project and your concentration of risk. Again, I don't want to reiterate everything that everyone said, but I will affirm everything that everyone said and provided to you as very, very good resources. Reach out to myself. If you have questions, I will have a cup of coffee with anyone, anytime, any place to talk about their project. Early and often is better. If our projects, our funding's a fit, that's great. If not, I love to spend other people's money. I love to send you to other places to be able to make sure that your project gets done. So thanks, Jen.
Awesome.
Thank you so much. Yeah, those are the perfect words to sort of end on. You know, reach out for help, talk to folks. Yeah, and we all love to make referrals and help spend each other's money. So it's Sarah.
Yeah, Anne Marie had posted a little bit earlier on about crowdfunding and how that has not come up yet. I don't know, Anne Marie, do you want to maybe unmute yourself and just mention what you had typed in the
Sure, happy to. I mean, obviously I'm crowdfunding. The more people who know about it, the better off I am. So what came through the local crowd Monadnock because of a board member who saw an opportunity and said, hey, we should follow this up. And I was like, well, that's for Monadnock, that's Keene. And they said, no, we want to be working in Vermont as well. So they provided training for us. And as a result, I have been working with a volunteer team of 4 other people to put together our crowdfunding campaign, which I hope, Richard, whatever phrase you just used about the case, I hope you like the case we put together. It's being very successful. We're at about 70% of our goal within 10 days or something like that. And I'm hoping that we're going to raise even more because I really want to do this project. I'm very excited about it, and I see it as potentially creating a product that would help the organization be sustainable as well. I didn't tell you what I'm doing. It's sharing housing. We're building an online training class that people can take whenever they want to.
Thank you.
And that just makes it sort of one point, you know, we could talk about fundraising and looking for money all day, and we probably have to let people go back to their lives and work. But, you know, one of the things that's really great in individual fundraising, crowdfunding, all those is really, it also does show support. You know, what a lot of bigger funders are looking for is support within that community, and that the product has traction, and that it's not just, you know, and it's diversifying, as Richard spoke to, you know, having a diverse base of donors and funding sources and revenue is really important. But, you know, that demonstration of support, it does speak to your project and speaks to other funders. So thank you.
Awesome. Jen, any final words before we, you know, let people go? 42 minutes over time.
I just thank you for sticking with it, and thank you for those who will watch this later on. And you know, yeah, I mean, this is, and thank you especially to Sarah, because you know, we started this conversation a year ago about like, how do we do this and who can we do this with, and we just know the need is out there and it's kind of diffuse. But you know, if this helps 2 organizations or 1 organization put together a winning project budget, you know, that is a win. Like that's all worth it. And so we just hope that this is contributing to the success of some more terrific local projects and organizations. That's what Sarah's program is all about. And thank you, Sarah, for pulling together another just rock star training.
Well, they make it easy. Wonderful. Well, thank you guys for sticking with us. You know, it's always great to stay within time, but when there's a lot of important information, you know, the fact that it's being recorded just makes it worth it to stick it out. So again, I'll send an email out that has all the PDFs of what was presented yesterday and today, contact information for those people that spoke towards the end of this. And again, reach out really if you have any other questions, or there was something you missed and you couldn't recall what it was. And then also keep an eye out for the other trainings in this project development series that's coming up. So that's the project management and grant writing, which will be fall and winter. So thanks again, and hopefully we'll see you at another training.
Thank you.
Bye, everyone.
Thank you all. That was wonderful.
Thanks, John.
Thanks, John. Enjoy this beautiful day.
Yes, enjoy the weekend.
When we were